Which method is exception to non-historical cost methods? A. Adjusted selling price, B. Latest purchase price, C. Standard cost, and D. Weighted average. Which method is an exception to non-historical cost method? Weighted average. This is because what is an exception? It's an exception to the non-historical cost method. In other words, what amongst these options is a historical cost method? Is adjusted selling price? No. The latest purchase price? No. Standard cost is not a historical cost. However, weighted average cost is. Therefore, correct answer is D, weighted average. Byproducts are generally valued at dash when the cost of the byproducts is not directly traceable. A. Cost of main products. B. NRV. C. Cost of main product or NRV, whichever is lower. None of these. Byproducts are generally valued at the net realizable value when the cost of the direct products is not directly traceable. Therefore, the correct answer is B, net realizable value, NRV. For the year ended 31st March 2011, sales amounted to 20 lakh at 20% profit on cost, of which goods sold for rupees 1 lakh are lying in the godown of the seller at the buyer's risk. These goods are treated as part of sales, A. Sales, B. Inventory, C. Sales return, and D. None of these. These goods are treated as part of sales. Correct answer should be A. Sales. The goods have been sold, but they have not gone out of the sellers. However, they have already been sold at buyer's risk. Next, the following are the features of perpetual inventory system except A. Inventory control can be achieved under this system. B. Inventory cannot be determined without affecting the operations of the business. C. This provides information about cost of goods sold. D. This is costlier method than periodic inventory system. The following are the features except one of them is not the feature. So what is this? Under perpetual inventory system, inventory control can be achieved. Cost of goods, you get information. It is costlier than the periodic inventory. Inventory cannot be determined without affecting. No, we can determine inventory from the records. We do not need to stop the operations of the business and count inventory. Therefore, the correct answer is B. B is not a feature of the perpetual inventory system. Messrs. X, Y, and Z are in retail business. The following information is obtained from their records for the year ended 31/3/2014. Goods received from suppliers 17,25,000 subject to trade discount and taxes. Trade discount 3%, sales tax 11%. Packaging and transportation charges 95,000. Sales during the year 25 lakhs. Selling price of closing inventory 4 lakhs. Find out the historical cost of inventory by using adjusted selling price method. Options A 2,50,680, B 2,69,280, C 2,14,575, and D none. What is the cost of goods if we take 17,25,000, add 3%, less 3% discount minus plus 11% sales tax. So cost of goods, total cost of goods would be 17,25,000 less 3% discount minus 3% plus 11%. We get a total cost of 18,57,307.50. This is the cost of goods. total, no, plus 95,000. Sorry, there is another packing and transportation plus 95,000, giving us 19,52,307.50. On the other hand, the sales is 25 lakh and the selling price of the closing inventory is 4 lakh. So, sales value is 25 plus 4 lakh, 29 lakh is the total sale value of all these goods. Cost so much, sale value so much. Therefore, what do we do under the adjusted selling price method? We take selling price less expected gross profit and arrive at the historical cost So we adjust the selling price and arrive at the cost for valuation of inventory. So here also we will do the same. This is the cost. This is the sales value. We want to find out the cost of 4 lakh. Therefore, the cost under adjusted value method, under adjusted selling price method would be equal to 19 lakh 52,307 divided by 29 lakh into 4 lakhs. That's equal to 2,69,280. Correct answer should be B, 2,69,280. Dash is a non-historical cost method and also called as a retail inventory method. A, LIFO method, B, adjusted selling price method, C, average price method, and D, standard price method. Which one is a non-historical cost method? Also called retail inventory method. The adjusted selling price method is the retail inventory method. It is also non-historical cost. It is not based on historical method as LIFO is, or as a weighted average price method might be. Standard price is also a non-historical method. However, it is not called a retail inventory method.